Alright guys, welcome back. So in this short video, I'm going to go over a trade I took yesterday on Ola Prime TV live on the NQ. Yesterday was a fantastic day for me, made over $4,000 live. And I'm going to go over one trade because it really kind of shows, it's not the best trade, but it really kind of shows why the footprint is so important. I'm going to break down exactly what I saw and how I was able to enter and also exit, even though it didn't go to my TP. It started going back a little bit and I was able to exit very quickly and still secure a profit. So let's roll the intro and get into it. Alright, so let's actually take a look at the trade live when I took it and how I entered and exited. So let's roll that clip now. Chat, what's going on?
What's poppin'?
It's crack-a-lacking.
It's crack-a-lacking.
Here we go.
I don't know how you make crack-a-lacking. It's English. I think it is. They might say it in America, but in the UK, yeah, it's kind of like a joke. Crack-a-lacking. Let's crack-a-lacking. You gotta teach us some Romanian slang, Adelina. Slang? I'm not finding it. I really don't know too much slang. Oh, really? I was one of those guys that didn't really like to talk in slang. Let me think about it.
Okay, so
I'm really hoping we break through here. Otherwise I'm going to have to flatten because this is a critical area. 300 buy contracts have been executed at the top here. If we don't get follow through, then I have to get out. Then that would indicate I'm most likely trapped, or those buyers are trapped. I'm okay, but there we go. All right, I got my 650. Maybe we can do a bit more. Give me a little bit more. Come on, get me to 700, and then I can. There we go, 700, 750. I'm happy. I'm gonna get out. No, no, I am $32 away from 4,000. Why? Oh, I must have got a bit of slippage just as that candle. Okay, I'm gonna make $32 now, Adelina. All right, guys. So here is the actual 1 minute chart on the candlestick of the actual trade I took. I entered around. I believe I entered pretty much on this candle. I got a bit of a bad entry. I entered here and I got out about here. So it doesn't look like much, you know, a few point movement. I mean, let's actually measure how many points that was. That was a, 14, 15 points, which is actually not bad. 14, 15 points is pretty decent, right? But obviously I was targeting at the top here of my TP, and you can see that it never actually got that, and my stop loss would have been just below this candle here, right? So I would have had a stop, so the trade would have looked roughly what I was anticipating would have been this and that. Okay, so decent risk reward, 1 to 2 risk reward, but obviously what actually happened was about that, right? And I'll tell you why I got out and why I entered, etc. So again, on the candlesticks, there's no way of knowing. If I want to draw your attention really quick to just this area here, right? On a candlestick, it doesn't really look like much. It's just a bit of a wick, right? And there's no way of no one would really enter based on that. Now I know that's technically a candlestick pattern. I know, a longer wick at the bottom with pretty much a full body indicates, and it engulfs the last candle, pretty much indicates that, it's a bullish move up. So yes, there is kind of truth to it, but I don't think many people would have taken that trade, right? Just based on a wick, because, you could have taken it here. Look at this candle, long wick. And you would have got stopped out and etc. So there's many times that wouldn't work. But if we switch over to the footprint, all becomes clear. So what I want to show you right now is notice again. All right, I want to show you. Look at these orders that came in here. Pretty big orders, right? 180, We had 150, 176, 202, and this is the delta, by the way, right? So it's the difference between the buyers and sellers. All right, another 140, 141, 142. So you can really see the sellers are piling on the positions. They're very aggressive, and it's going in their favor. The market is actually pushing down as these orders are coming in, right? Another 100, another 90. But then we start seeing the first sign of buyers coming in. Now this doesn't mean you should enter a buy, the first sign, of course not. But this is the first sign of some kind of aggressive buying happening. Now, are those fresh buyers? Probably not. That's probably a lot of these sellers, some of these sellers, you know, who were in this move down, taking profit. They're exiting their position. They're cashing in, right? But what is really important, and what really got me, I'm jumping in right away, is this right here. 236 extra sell contracts traded right at the bottom, and instantly they could not push it any lower. They didn't even go a tick lower. That's 236 sell contracts, and it didn't push it one tick lower. What does that tell you? Well, it basically tells you that it's going to need a lot more sell pressure coming into the market to break whatever iceberg or whatever is holding this area here, right? So if 236 contracts couldn't do it, 300 probably couldn't, maybe not even 400. You're going to need a lot more. So would you really want to sell in that position? Probably not, right? You probably don't want to be selling or lining yourself on the side of the market where it's inefficient, right? Where it's not very effective, where it requires so much volume in order to break or go lower in your direction. You rather side yourself in the market with, you know, where it doesn't require that much volume to push it in your direction, right? So, the moment I saw that right there, I instantly, my eyes opened, and I thought, okay, I'm just going to give it a couple more seconds, see what happens. Again, another 100 contracts were traded, still couldn't push it down. In fact, we just blew right through. And then a bit of buy pressure coming in. Not great, 63 contracts, not the most, but it's a decent amount. Okay, I'm pretty happy. I'm jumping in, expecting a nice kind of push up now. And we did get that push up, you know, 124 contracts. But look what happened. 200 came in, 184 came in. We're still kind of pushing up, but we just kind of lose steam. And then we have this come in, 96 contracts, right, on the sell side, okay? And they're quite effective at pushing the market down. And we get 145 come in. And at this point, I'm like, nah, the sellers have taken control again. They have found their aggression. Buyers are not able to push it up. I'm getting out the market. I don't think this is going to hold, right? And then we had a bit of a battle between buyers and sellers here, where it just kind of went up, down, up, down, up, down. And eventually, the sellers broke through with heavier contracts, and we pushed down again. Okay, so you can only trade, you can only react to what the market's giving you, right? When that 236 was printed, there's no guarantee that the market's going to go to your TP, right? There never is. Right, you have to, as a scalper, right, as someone who scalps the market on the footprint, on the, you know, the data that's coming in every second, as someone who is a scalper, you can only react to what is happening in that moment, okay? And initially, yes, I was correct in my idea that we're pushing up. We did push up, but I also recognized the moment I realized this ain't gonna happen. All right, the moment I realized, nah, it's not ready yet. It's not going to make its move yet. It's not going to go to my TP. I have two options. I can either get out now and lock in a bit of profit, right? Or I can get stopped out. But, you know, of course, I'm gonna lock in some profit, right? Why wait and get stopped out? Okay. If it comes back to kind of my entry, and then I see again sellers struggling and then buyers coming in and they start pushing up, I can always jump back in again, and maybe then the move will actually extend, right? But you can't marry a trade. That's my point here. You can't get too attached to a trade. You can always jump in again. It's very easy, click of a button, right? But I hope that kind of breaks down why the footprint is so important, because you can literally see it clear as day, crystal clear, right? You just have to be observant, all right? You have to actually observe the market, see what is going on, and the moment you see something, you have to be quick. Just jump in, you know, don't worry if you're wrong, you're wrong. That's why you have a stop. My stop would have been literally right there, just below the 236 sellers. Because if we go back down again and we fail, and we start pushing down and those sellers get released, so a lot of people call them, you know, trap sellers or trap buyers. That's another great way of thinking about it. You know, people are trapped at the bottom here. What happens if they're trapped, they sold and it goes against them? They're going to be forced to get out the market. And you can literally see that. They are forced to get out the market. These might be fresh buyers. They might also be the sellers getting out, basically being squeezed out the market. It's always going to be a combination, right? But if you read it like a story, it starts becoming clear. So the story here is fresh sellers came in, bang, 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 pushing a lot of volume to market. They're pushing the market down nicely. Fresh sellers, boom, boom, boom. Some sellers taking profit, right? Only a fraction. More sellers coming in thinking the move is going to continue down, right? They're now locked in a trade. So these sellers are locked into a sell trade. So I'll draw that out for you, right? These 236 sellers, they're looking at something, you know, let me just get rid of all these drawings. There you go. You know, they're like this. They're probably got, you know, their stop who knows where, and they're targeting again wherever. Oops, they're targeting wherever they want, right? And instantly it's going against them. They're starting to panic. They're saying, "Oh man, what's going on? Oh no, you know, the trade's going against me." As soon as it goes against them a little bit, you know, 10, 15 points, whatever, they start dropping out. They start, okay, get out this order. And that converts that exit, looks like buyers, right? Because that is essentially what you're doing, right? If you're hitting a market order, whether you're cancelling a trade or flattening, getting out, or clicking buy and sell, that is a market order, and that will appear in the footprint, right? The only trades that don't appear in the footprint are things like stop losses, right? Because they're pending orders, right? But anyway, so again, you can literally see where these sellers, right? Because it's 200, 300, 330 or so sellers. You can literally see it almost matches up perfectly. You know, some of these are going to be fresh buyers, of course, as well. But you can literally see where these sellers are getting out the market. And they get squeezed out. And it pushes up a little bit. But then this fresh wave of sellers, aggressive sellers, come in and they're able to push the market back down, leading me to get out of my position. So very, very simple, right? So I hope that little breakdown can kind of give you an idea of how to read the footprint. There are many ways you can read it as well. That's personally how I read it, and I do this day in, day out. You wouldn't believe how many opportunities there are on a single day of trades just like that, and you only need to catch a few of them to make some very decent money every single day. So I hope that was useful for you guys. Do hit that subscribe button, turn on channel notifications for more breakdowns, for more reaction comments, and reaction videos to all different trading stuff. I'm going to be bringing a lot of good value to this channel, so hopefully you can join me on this journey. But apart from that, thank you guys for watching, and I'll see you again very soon. Take care.